time now to talk to a specific company, and about Uflex it is, because the numbers were on the weaker side. We have with us Mr. Rajesh Bhatia, the Group CFO, joining us to talk to us about their earnings. Mr. Bhatia, hi. Thank you for joining us. I understand that there was an exceptional item that you took on account of the forex hit in the quarter gone by, and that led to a loss in the June quarter. But a two-part question in terms of the exceptional, will it continue in the coming quarters? And overall, operationally speaking, how was the earnings?
Operationally speaking, I think let's come to that first. So there are positives to note by in this quarter, like, aseptic packaging continued its run, and we've achieved another highest ever revenue from this business in this quarter. We've also achieved the highest ever sales volume of our India packaging films business with the commissioning of our Dharwad plant from 1st of April. And that plant has contributed to, that plant's capacity utilization is very high, considering that it's the first quarter for that. It's about 77%. And we have done a fair bit on the export side as well. So, while we had a thrust of the packaging, flexible packaging on the export side, but given the thrust we had on the aseptic packaging on the export side, so we've achieved a new high in our export volumes as well as our revenues. So, apart from, the sluggishness in European and American markets, which continues for the packaging films business for the reasons all known to us, there are other sets of the businesses which have shown tremendous, growth, and they are doing well. Both flexible packaging, aseptic packaging, holographic films packaging, they've all done well on even on a quarter-to-quarter basis. So for us, the take is that, if I look at the March quarter versus this quarter, which means Q4 of FY23 and this quarter, when I see the competition vis-a-vis us, we are clearly much better performer in this quarter. If we look at we've delivered a much better EBITDA to the revenue in this quarter as compared to the rest of the competition. And our volumes on the packaging films in India, globally, yes, as I said, that there are still challenges in the America and the European market, but I think another quarter and we'll have the volumes, we'll see the ramp up of the volumes. We've not seen any degrowth vis-a-vis Q4 of the last year in any of the businesses on the volume.
Mr. Bhatia,
that augurs well.
Mr. Bhatia, I want to understand all these endeavors of yours. How is it likely to pan out in improved earnings in the next couple of quarters?
So I think the ongoing quarter is the one which will remain, sort of sluggish. We expecting that, post-September quarter, we'll see the better volumes coming from our international packaging films businesses, and that's what will augur the earnings momentum coming back to this. And hopefully, with Nigeria having devalued its currency, having changed the policy from Central Bank of Nigeria peg of the currency to the dollars to a free market related, the exchange parity, I think we'll see it's still in the stage of settling down. So we'll take a couple of quarters before it settles down. So I think next quarters, from a perspective of how their currency moves, is also sort of remains to be seen. Even in the normalized EBITDA this quarter, in the standalone results, there is an overall negative impact of about 18 crores to us on account of the exchange losses, largely coming from again Egypt, because Egypt is the one who's been troubling us on the currency side for the last 1 year, and that adjustment and the settlement is still a continuous process, and every quarter we are seeing some devaluation of the Egyptian currency vis-a-vis the dollar, which is leading to reporting exchange losses due for our earning. So if we were to negate that impact, I think our margins will look far better.
I
Which is
understand.
the right way to look at the earnings, because these are more or less they are not have a cash flow
Sure.
or other impact. So it's just
Right.
because currency has changed and
I
the report.
understand, Mr. Bhatia. We are slightly short on time. I want to quickly understand from you, what are your plans on debt reduction? There's also a large part of the market who believe that there's a lot of deep value in your company, which can be the scope of unlocking it. Any thoughts on that, Light?
So I think the debt reduction part is a normal amortization process which we will have every year. So while we have there is no specific uh, plan on as to we should how we reduce the debt. I think this will happen over a period of time gradually. We have each year about 500 crores of the debt which needs to be paid, so that will keep on getting paid. On the stock value creation, I think we were looking at a point in time the US listing, which was very advanced, but then the markets uh, became the other way. So those plans will come back. We've done a fair bit of work on that, and I think those plans is what we need to revive as and when the markets come back, and then surely we'll see the stock getting re-rated. Our packaging films business, our aseptic packaging business, which is a value-added business, they have shown great momentum in the last 1 year, and building on that momentum, I think the value in the stock
Sure.
will get unshackled.
Sure, absolutely. So looking at the US listing to unlock the value as well, what we were getting at was perhaps a demerger of the packaging and the other business. But nonetheless, we'll pick up that conversation at some other point of time, Mr. Bhatia. For now, we let you go. Appreciate for making time and speaking with ET now.